Okay, so um, this is a kind of a little side topic that's brought up in this chapter is how to deal with sales tax. So whenever a business charges you sales tax, you are paying them money. Yes, this is true. Your cash is going to the business, but that business, it's not their money. They're collecting money on behalf of the government. Okay, so though you're paying them this larger cash amount, there's a liability that's also kind of created through that process. Okay, so we have to account for this properly. Because if you just say all of it is revenue for the business, then that's not technically correct. Because if you go to the restaurant and your bill is $50 and the sales tax is an extra $5, the restaurant didn't actually generate $55 of revenue, right? That though you're paying them 55, $5 of that is on behalf of, the government. Okay, so we want to make sure that that cash that you're paying as a customer, the business is going to account for it properly. So again, the cash that's coming in is going to be split between your business as revenue, and then you're going to have a liability called sales tax payable. So um, here's a journal entry where it's this is pretty straightforward, I think. So a sale happens. You sell some item for $10,000, and there's a 6% sales tax on that. Okay, so the customer is going to give you $10,600 of cash when they make that purchase. You're going to record a revenue for the 10,000, which was the actual amount that you sold it for, and then you have this liability, $600. This is money that you're going to have to pay to the government. Okay, your business remits this sales tax that you've collected to the government every quarter or every month, depending on how much sales volume you generate. Okay, so this happened on the 21st. And then now when the company actually sends money, you're going to write a check to, I think in California, it's the California Department of Taxing, CTDFA. I don't know what the FA stands for, but it's the government entity that collects sales tax. Okay, so your business will write a check to the state of California essentially, and so that will be cash that's leaving, and this liability goes away. And this cash, remember, is collected from the customer here. That's where that $600 came from. It's not your it's not your business's like own money, you can say. It was collected on the from the because technically you, the customer, owe the sales tax. Like I don't know, but now it's kind of changed. But before the laws were kind of like caught up to e-commerce, a lot of things that you bought on Amazon, they didn't charge sales tax, right? They didn't collect sales tax. Now they do. The California laws and the state laws have kind of caught up. But there was a time in e-commerce where we could buy certain items from certain merchants, and they would not collect the sales tax. So it's cheaper than if you bought it at the store, even if it was for the same price. But if you filled out your California state tax form, it would ask you, have you made purchases that the sales and use tax was not collected? And you technically, no one did this, but technically you're supposed to declare at that time that you bought these items and paid the sales tax at that time. But now that and no one did that, so the state was losing out on a bunch of revenue from e-commerce. So what they've now done is they've put the onus on the merchant to collect the sales tax. Okay, even though they're out of state. Um, so it's technically the sales tax is collected uh, wherever like it's being delivered to. So like that's why your zip code when you put in the zip code in Amazon, it will change the sales tax depending on where you're shipping it to. Okay. But before Amazon had to have a nexus in California, meaning they had to have some operations for them to be obligated to collect the tax. Um, but they just like they didn't have warehouses in California for a long time because of this. But now they do because the tax, the state kind of forced them to do it.